Late October, NVIDIA coils into a tight 10-day base between $179 and $186, and something powerful is happening underneath it. 3 separate anchored VWAP lines, one from the August 12th high, one from the September 2nd low, and one from the October 10th reversal, all squeezed together into a single tight band right around 182. Buyers from the top, buyers from the bottom, buyers from the most recent shakeout, all agreeing on the exact same price. That's equilibrium. That's a coiled spring. That is the pinch. But you have to do it right. A real pinch isn't just lines getting close. It's volatility contracting. The range getting tighter and tighter right at the very end. Wide and sloppy does not count.
Let me just say a word about anchored VWAP pinch. I kind of wish I never wrote about them because everyone is talking about VWAP pinches. And technically this is a pinch, but it's a terrible pinch because it's so wide. What I want to see in a pinch is something like this. I shouldn't have drawn that last one. Is something that looks like this, that it really compresses. So like, like what Minervini calls a volatility compression, contraction. Thank you. Contraction pattern.
And when a level from a major high, a major low, and a recent event all stack on top of each other, the chart is telling you that nobody has an edge. It's perfect balance. And balance always breaks. The only question is direction, and for that, Shannon watches one number above all.
That first little bounce in here occurred at the VWAP from the beginning of that leg higher the prior day. Right here is really where the sellers gain control because the buyers that were left over from yesterday and defended this level gave up, and then it really, unwound to the downside.
The coil clears 186 on October 24th. It confirms with a gap to 191 on the 27th, and on the 28th, it explodes, gapping to 193, running to 203, and closing at 201. Brian doesn't anticipate the move. He buys the strength once it proves itself.
We want to be in the position of strength from the onset. When the buyers gain control is when we want to be involved. When the sellers gain control at those red dots and it starts to break down and I can define my risk, that's when I want to get involved.
This is the highest conviction trade of the year. A leader moving with the trend. So Brian leans on a little leverage, 500 shares at $193, a $96,500 position. The stop goes at 186, because if price falls back inside the pinch, the breakout failed, and the thesis is dead. That's $3,500 of risk, under 3% of the account. Now, how does he take profits? In thirds. And his roadmap for where to trim is the daily pivot levels.
What you have are what's known as pivot, R1, R2, R3, S1, S2, S3. And you go to S20 if you wanted it, an R20. They don't get hit very often. But I saw a study once that said the average stock on a given day will trade between daily S2 and daily R2 87% of the time. Only 13% of the time does a stock travel outside of that range.
Pivots are support and resistance levels, calculated from yesterday's high, low, and close. There's a center pivot, and above it, 3 resistance levels, R1, R2, and R3. Here's Brian's edge. A 2022 analysis of 4,000 pivot breakout trades across NASDAQ 100 stocks found that R1 breakouts reaching R2 occurred 56% of the time. R2 breakouts reaching R3 occurred only 38% of the time. S1 breakdowns reaching S2 occurred 54% of the time. That same source also notes research shows price reacts at pivot levels 64% of the time across major equity indices. So R2 becomes a logical level of interest, a place to take something off.
Of course.
On October 29th, NVIDIA's R2 sat at about $209.70. The stock gapped up, ran straight into it, and peaked at $211.92, right at R2, just poking toward R3. Exactly where the math said it would stall, but Brian doesn't sell just because price hits a number. He uses the 2-minute exit.
It'll have a little shakeout below that VWAP, then it comes back up, and then it goes and closes near the high of the day.
As long as every 2-minute bar prints a higher low, he holds. The instant one breaks a lower low, the piece comes off. At 10 a.m., the high printed. 2 minutes later, the bar broke its prior low. The second third came off right around 211. The first third he'd already trimmed into the gap up strength near 207. And the final third came off as the stock stalled on the 30th and 31st near 203. Sell into strength. Never try to nail the exact top.
You teach scaling out of your profitable position. Could you elaborate on why? What's your experience that prompts you to do that?
Sure. I mean, I do that because I like to ring the register. And if I don't, every time I don't take some off, it seems like it always fails.
Total profit on the trade, roughly $6,800. The account moves from $118,000 to $124,800. The pinch, the pivots, and the thirds. The highest conviction play of the year, executed by the rules.